decided to, since I figured out how this works now, to do another video in this particular instance excuse me, about the kiwi, and in particular I wanted to use this opportunity to show that, you know, all the lines that I've been drawing on my screen, they're not arbitrarily drawn, right? I'm sure that everybody has been told already, okay, if you draw enough lines, price will definitely go there. That is absolutely true, but you have to intelligently, so to speak, draw lines. So let's start. Kiwi. I'll try to say a little bit less frequent, but I can't promise anything. So starting monthly chart. All right. So we have a predominant pitchfork that you see here with the red median line, and all those other lines have been drawn off pretty important points in time, going back to in this case 2000, 2001, and they are not drawn obviously arbitrarily. Those are drawn off highs here, and of course I could go overboard, but if I clone, oh yeah, it didn't work before, but anyway, if I would slide, oh, it did work. If I would slide this one, you know, arbitrarily, and I would put it here, obviously at this point in time in 2005, it acted kind of as resistance, right? But wasn't really precise. But what did it do? It was pretty damn precise here in 2013, and the approach here was definitely rejected. All right. Now I'm not saying you have to start drawing lines from every little point here, because, you know, then your chart will look like a child's drawing, and that is not the way you want to trade. But I'm just saying that price, and that's what slope analysis is about. And thank you very much for SB Trade Desk, Jamie Setley, for teaching me this, or rather introducing me to this, because since I've been introduced to this, my trading has you know, gone better, like in 1,000%, let's say. Of course, the danger is you have to really know when and how to use these slopes. Okay. What else is important on this chart? As you can see, the lower, or the sliding parallel here, actually was the last resort between the lower parallel, right? Okay, so this area here should definitely, on a monthly basis, we're looking at a monthly chart, this area here should provide some support. And I drew another one here, a very short-term one. Just because it touched twice doesn't mean it's just like a trend line. If a trend line just is drawn between 2 points, that's not really a trend line. Yes, I'm very well aware of that, but if the moment when I drew this trend line, I didn't know it was going to be some kind of support here or some kind of support here. So I'm just saying, and we'll see that on the lower time frames too, sometimes, or most of the times, if your lines are drawn intelligently, so to speak, you could take a trade off of it with a 10-15 pip loss, stop loss, and make a, I don't know, 50 to 1 profitable trade. All right. Okay. So this particular chart, I have this front and center. I have a bunch of other ones, of course, with monthly charts, with other pairs. I look at it. I don't look at it every day, but I do look at it because I want to know where the levels are. And I don't only want to know where the slope comes in. Of course, I want to know horizontal levels too, Fibonacci levels. So I know with every pair, okay, where are we in this point of time within the compounds of this structure, because the structure is still not broken. The fork caught the high perfectly here, so could be that it will catch the low perfectly here too, right? Okay. Now, lower time frames. Let's go to a weekly. I really don't like this weekly. It's really a bit messy. But if I zoom out, you know, same thing here. Sliding parallels. Look at the red line, and look where the low came in. I mean, this is 2001, and it hasn't really been support resistance at all, but I drew it anyway. It was support here, and look where the low came in here last year in August. Tack, right there. All right. Okay. So like I said, the weekly, don't really like it that much. I'm sure it has something to do with I don't see very much trustworthy structure on the weekly here. Another thing, just like I got a fork here and a sliding parallel of this high caught the high pretty well right here too. So those lines, I'm just saying, those lines are not there just because they're lines, right? Okay. Even lower time frames, and now here it's getting pretty interesting on a daily. Just saying, taking sliding parallels off the spike highs like this one really caught the low this year in January, or on the 20th, right? So it's a method. It's not a 100% foolproof method, of course not, but look, it really caught it. If you went long here, you would have had 200 pips easily with a 10 pip stop or 20 pip stop, whatever. All right. So slope is important, and of course horizontal levels, definitely important. What else is important? If you look at the low here, actually, if you look here, daily reversal support came in pretty much at the same place. So this, if you had slope here, daily reversal support, that's two indications that this level is very important. All right, that, and you know, if you, it's an addition of how confident can I be to take a trade. Is that the is that a logical risk-reward ratio, right? Okay, so what am I looking at since we're on a daily is I'm still bullish Kiwi. We closed here right at the daily, at the daily close of Thursday. So I would say, oh sorry, I've got this, got to take this out. That's just annoying. I would say daily reversal here around 64.48 should provide enough resistance, enough support to go so that Kiwi goes higher. That's why the red thing is here to remind me, hey, wait, if it goes here, start being careful with longs, and if you go below here, yeah, then it will probably drop, because at that point also the RSI trend line will be broken, so then you start looking lower. Okay, and then you start looking at this sliding parallel again, and probably this would be a level to look at if it goes lower. So we're talking about 62.89, right? So just trying to show how I think and what my method would be in case of. Okay. All right. 4-hour chart, same principle, sliding parallels, same here. I mean, the sliding parallel from here would coincide with the fork, of course. This sliding parallel was support here, almost support here, and definitely support here. So going back to my previous statement, if you took a long here with just a 10 pip stop, it's like a hope and pray trade, but still you would be up I don't know how much, 20-30 pips, right? So that would be, with a 10 pip stop, you would have a 3-to-1 trade. Okay. All right. That was it. Same, one last remark, same remark as with the euro dollar. If the Kiwi goes down a little bit at the open today, buying opportunity, looking for 65 initially, and 66.50 basically in extension. Okay, I hope this was helpful, and try to explain a little bit what all those lines on my chart are. And if you have any questions, don't hesitate to contact me. Happy trading. Have a good week. Bye bye.